Having a good credit score, especially right now in this economy, is one of the single most important things that you can do to get a loan. And in this video, I'm going to tell you the steps that you can take to improve your credit score in 30 days. So let's get started. Hey guys, Kathy Salmon here with Easy Home Search Real Estate. You know one of the most important things when getting any loan is having a good credit score. A low credit score means higher interest rates, and in today's economy with the interest rates as high as they are, why not do what you can to get the best interest rate? So the first thing I'm going to talk about are the 5 categories that make up your credit score. It's very important that you know where those numbers are coming from. First is timely payments, which makes up 35% of your credit score. The next is your credit utilization, which is 30% of your credit score. Your payment history is 15% of your credit score. The number of trade lines you have is 10%, and any hard inquiries is also 10%. Now that you know what makes up your credit score, let's get started with the 10 steps that will help you boost your credit score. And stay till the very end because each one of these 10 steps is a great way to get your credit score boosted. The first thing that you want to do, make sure your credit report is accurate. It's the single most important thing that you can do to help your credit score. Go to annualcreditreport.com. You can get a free credit report that will show you all 3 major credit bureaus, the TransUnion, Equifax, and Experian. You can read your report and make sure it's correct. And things to look for are old debt that should have been removed, information that's not even yours, fraudulent charges. And if you find something on your credit report that shouldn't be there, you can file a dispute with each of the credit bureaus. So take the time to dispute any of these errors on your report and remove any bad information. For example, if you happen to find the same debt listed twice, removing this can lower the amount of debt listed on your credit report, which in turn can lift your score. Remember, credit utilization makes up 30% of your score and can make a big difference. Number 2, sign up for Credit Karma. It's a myth that checking your credit score lowers it. Checking your credit score is one of the best ways to stay on top of your credit and see what's impacting your score. And Credit Karma is free. It allows you to see your credit score, credit reports, and any monitoring that's being done. It's a fantastic tool for improving your credit score. And once again, checking your score has no impact on your credit. Knowing your credit score, you'll at least have an idea of where you stand and what chances you have of being approved. Step number 3, pay your bills on time. This is a given. But paying your bills on time affects your credit report big time. Lenders want to see that borrowers can be trusted, and this is the one best way to show that you're a responsible borrower. And if you want to lower your chances of missing a payment, put it on auto pay if you can. This way, you don't have to remember to write out a check or pay it online. It not only can save you money, but also time. Step number 4, use credit cards responsibly. Besides getting cash back or travel rewards, credit cards could be a great tool to help you build your credit. Credit cards can raise your score or damage it if you don't use it responsibly. And if you have no credit or poor credit, using a credit card and paying it off on time every month could help you get a much better credit score. And here's a bonus tip. Try and pay your card before it's due. This could potentially boost your credit score even faster. Step 5, pay down a credit card or a loan. Your credit utilization is 30% of your score. This is the amount of the potential credit you have versus how much of that credit line you're actually using. So for example, if you have a credit card that allows you to use up to $1,000, if you keep that credit balance at no more than $300, you are within the credit utilization ratio of 30%. This can make a huge difference on your score. And if you want to bump up the chances of your credit score going up, think about paying down the credit card that's closest to being maxed out. Not only could your score go up, by bringing down that amount of your available credit that you're using, but that credit card issuer may likely offer you a credit line increase, which brings me to the next step. Step number 6, increase your credit limit on current credit cards. If you've been making your payments on time for the last 6 months, consider asking your credit card company for an increase in the line of credit. Yes, an increase is generally a hard inquiry and can ding your credit score by just a few points, but the benefits of having a greater credit limit could have a better impact on your credit score. If your credit limit increase is approved, your credit utilization rate will drop, which has the potential to improve your credit scores fairly quickly. Some credit card companies will automatically offer the high credit limits as well. This usually occurs on the cards that have the most spending activity. But just don't overspend just because you have more available credit, because it could have the opposite effect. Hey guys, if you like what you see so far in this video and you're learning a lot, go ahead and hit that like button. And if you want to see more of these informational videos, go ahead and hit that subscribe button and hit the bell. That way you'll be notified when my next video comes out. Step number 7, make payments twice a month. If you know you spend a certain amount of money on your account every month, make 2 payments instead of just 1 to pay it off. This could actually help increase your credit score by keeping your credit utilization low. So for example, instead of paying $500 once per month, pay $250 twice per month. This way, the amount of credit you use stays low and is reflected on the algorithms that the reporting agencies use. Step number 8, consolidate your debt. If you have more than 1 credit card with high interest rates, consider applying for a credit card that's offering a balance transfer promotion to consolidate your credit card debt. Your credit card score could improve since you have a higher amount of credit now available, and you'll save some money by decreasing the amount of interest that you're paying. And it's just less of a headache to pay 1 bill instead of 2 or 3. But hide those credit cards if you think you can't afford to control the spending. Balance transfers are a popular method to use to eliminate debt, but the strategy can backfire if you charge your credit cards back up again. Step number 9, ask to be added as an authorized user. If you have a family member or a friend you trust and one that trusts you, ask them to add you as an authorized user on one of their credit card accounts. This is another way to potentially boost your credit score. Ideally, the account you're going to be added to should have a long history of on-time payments and a low balance. If they do give you permission, don't do anything that will jeopardize their credit because the person is trusting you and they are responsible for the authorized user's debt. And step number 10, don't cancel any old accounts. Whatever you do, try to maintain your oldest accounts. These older accounts can help improve credit scores since you've had them for a while. The length of your credit history can help show the lenders that you have a long track record of using credit responsibly. This means the older the account is, the better it is and better to hang on to and not cancel your card. One of the biggest mistakes people make is closing all their old accounts. It's okay to cut up the cards, burn them, stomp on them, melt them, whatever you need to do, but don't close the accounts. Credit age makes up 15% of your total credit score, and closing old accounts could bring that score down. Well, I want to thank you for joining me today, and I hope you found it informational. And if you did, go ahead and leave a comment in the comment section below. And if you have any questions, leave a question below. I'll be sure to get back to you. Take care and see you at the next video.